Good morning, everybody. Hopefully, y'all are having a great Thursday. Let me just make sure that the audio is going through. Please press 1 in the chat if you can hear the audio. One. Great. Thank you, Martin. Thank you, Popstar. Glad y'all are here today. So we're going to do things a little bit differently today, partially because I got a late start to the day. Workout lasted a little bit longer than I anticipated. And partially because I want to see, or I want to show y'all how I do my morning analysis. So I needed to log into Thinkorswim first of all, without showing my password preferably. What's up, Popstar? How you doing today? We're all living the dream out here, hopefully. Let me find my dang password, log into Thinkorswim right quick, and I'm going to show y'all my morning analysis and how I kind of start the day off, basically. The morning bell is about to ring. It just rang, actually. But, yeah, I'm going to show y'all how exactly I do my morning analysis and determine which way I think the stock market is going to go, obviously. Don't take it as gospel. You can find your own sort of routine in the morning or whatever. But this is my routine that I go through pretty much every single morning. Was tired yesterday, so it didn't appear, but great today. Trading days, always great. Yeah, gotta love trading days. Oh, come on now. Come on now. Let me log into my dang Thinkorswim, please. Alright, there we go. So far this morning, we are down, last I checked, about more than 1%. If we look at SPY, currently trading at $395 just about, and partly because of Fed Chair Powell coming in yesterday, which is what you saw in the title for this video, partly because rates should be going up after what Fed Chair Powell said. Rates across the world are actually going up. We saw the ECB, the European Central Bank, end up raising rates by 50 basis points. Even though they're going into a recession, we saw other central banks, large central banks, raising their rates. So that's kind of what's tanking the market right now, right? So if you look at something like the 10-year Treasury yield, this is actually down overnight, surprisingly. So this went from 3.503 to 3.459. I'm actually kind of shocked that went down, which probably means that TLT is probably seeing a bit of a rise, even though I opened a call credit spread yesterday. So basically, the markets are disagreeing right now with what the Fed came out and basically said yesterday. So we had the summary of economic projections come out. Okay, so I'm gonna write all of this down in the Discord, and you'll get to see my morning analysis and how I go through my morning routine. So let me pull up the morning analysis for everybody. Morning market updates. So y'all get this every morning. You'll be the first to get it. If you join the premium Discord, we do have a free trial for it. And I just set up a link to where y'all can join, hopefully. Where is the link for it? Y'all can join with this. So it'll give you a 1-week free trial. It's really nice that Discord actually does this. And a note on that, if you're using mobile, you won't be able to. For some reason, they haven't set it up on mobile, but besides the point, we want to look at the news first. So the news is the first thing that I'm looking at in the morning. I'm going to go to investing.com, go into the news tab, and I usually just go with what's most popular. So we're seeing ECB, the European Central Bank, raising interest rates by 50 basis points, even though Europe is currently in a recession. We're seeing Wall Street set to open sharply lower. It was down like 1 point something percent. Let's see, SPY down 1.3% this morning. So what I'll do is I'll take whatever the market is down by, which is 1.3% at the moment. Back to this morning market update. Tag everybody. Markets are off to a rough start this morning with SPY down 1.4% from yesterday's close. After Fed Chair Powell's speech yesterday and the summary of economic projections. The Fed increased their funds rate by 50 basis points for this month, and they're planning to go as high as 5.1 to 5.4% by the end of next year. And I'm pulling all this data from what we saw yesterday. And you can find this on the Fed's, if you search for FOMC calendar, meeting calendar. Dude, my stream is so fast today. That's good. I like that. But yeah, we go to December and we look at the projections material, and I'll link this in the comments for everybody. Good morning, Kamala. So let's see. So this is where I'm getting it from right here, 5.1 to 5.4. And this is the end of 2023. Okay. So that means that they're not planning to cut rates, which is what the markets expected until 2024. So the markets, the bond market specifically, expected the Fed to cut rates in the middle of the year in Q2. But the markets and the Fed are coming to a disagreement. And I made a tweet about this morning talking about how, you know, everybody kind of loves the saying, don't fight the Fed whenever the markets are going up. But then once people's portfolios start coming down, then they don't really like that saying anymore. And that's something that I will continue to say. Do not fight the Fed, right? So the Fed is sucking liquidity out of the market, which is going to dry up demand because prices are only a function of supply and demand. So as people have less discretionary income, they're going to buy less stocks. Stock prices are going to come down. That's just the inevitability. It's really just based on supply and demand, and as the Fed keeps going higher and higher and higher with interest rates, people just can't afford as much margin. If margin rates are going up with those higher interest rates, people are going to be spending more money on things like houses and vehicles. Who's the Fed? The Fed members. Papa Powell is one of them. He's the main one. He's the Fed chair. But anyway, so planning to go as high as 5.1 to 5.4% by the end of next year. No plans to cut rates in Q2 as the bond market expected. So stocks are selling off on this news. ECB, the European Central Bank, also raised rates 50 basis points even in the face of a recession because it is necessary. It is a necessary evil in order to get rid of, well, I can't type this morning, of inflation. So the problem with inflation is if inflation keeps eating away at people's buying power, who does it hurt the worst. It's not going to hurt the investment bankers, the people that are millionaires, billionaires, because they can continue to be able to afford stuff until prices go up, 1,000,000% because they have so much more money. Exactly, Popstar. It's going to hurt the people at the bottom the worst. Yes, retail traders. And even more so, the people that can't even afford to buy stocks, the people that are already living paycheck to paycheck, right? So the people that are already living paycheck to paycheck can't afford to pay, 7% extra prices next year or however much more inflation we're going to have. People are already struggling now. So those people that are already struggling now are going to have an even harder time next year, right? And the problem with that is once you have more people being sent into poverty, basically, because of the high inflation, the more that you're going to get an uprise out of the population. So the problem with inflation is that it is a threat to democracy. Don't want to get too political about this, but look at countries like Argentina, look at countries like, I always want to say Brazil, but I know it's not Brazil. Look at countries like, I forget what it is. Countries with highest inflation. But if you look at countries like Argentina, Venezuela, look at the chaos that's going on in those countries. That's what happens when people get put into poverty. And if inflation keeps running, it is a threat to democracy. What do you expect? I mean, I'm not going to get... I think both sides of the political spectrum have aided in this high inflation. So, the ECB raised rates 50 basis points in the face of a recession because it's a necessary evil. Inflation is a threat to democracy, so it must be tamed with higher interest rates. That's basically the only thing that we have in order to combat high inflation. I mean, you could get rid of inflation by prices are just supply and demand, right? So if we're able to increase the supply chain to match the amount of demand, then yeah, we would be able to reduce inflation. But in order for that to happen, we're already at maximum employment, basically. We're at 3.5% or whatever it is these days, 3.5, 3.7%. So we're already at maximum employment. So what we need in order to get the supply chains, working smoothly is more automation. So, more robots, more, just generally more automation in order to, fix the supply chain issues that we've kind of found ourselves with. And a lot of that is due to globalization. So now that we're so reliant on China and now China hates us, it's kind of putting us in a pickle. Yeah. It really is. It really is war when people don't have anything, they're going to rise up, Generally, whenever prices go up and whenever people get unemployed, people get laid off, crime actually rises during times of economic uncertainty during recessions. There's a general correlation. I don't know if correlation is causation, but there is a general rise in crime whenever things are not going so great in the economy. Yeah, it will be worse without intervention. If the Fed doesn't continue to raise interest rates, it will get a lot worse, just like it did back in the 1970s. Now, I don't know if there was a ton of crime and stuff back in the 1970s and 1980s. I know there was a lot of drugs being done. Kind of wish I could go back to the 1970s a little bit. Obviously, wouldn't want to deal with the inflation of that period. But I've always kind of wanted to, relive the 1970s and 80s, even though I was born in 1995. But anyway, back to the markets. So ECB raising rates 50 basis points in the face of a recession. Inflation is a threat to democracy. It must be tamed with higher interest rates. Markets don't want to believe this, but it is the reality. Well, it is my reality at least. Higher interest rates make high growth stocks less appealing. From usually people use DCF or DCF models. Discounted cash flow. Usually it's future cash flow. So basically, as the interest rates go up, it costs the companies that need to borrow money in order to grow their business more, in order to take on that new debt, in order to grow their business. So it slows down the growth of these high growth companies. So Tesla is a good example of it. I don't think that Tesla necessarily fits into the box because I don't think that they need as much debt as a lot of other growth companies do. But, you know, a company that wants to grow itself by 50% a year is what they're proposing. They are going to need to take on at least some debt in order to finance that. Yeah, up 30% on a trade right now. Yeah. We're trying to make it out here. I'm up a nice little 88% on this put debit spread that I had opened yesterday, assuming SPY is going to be below 397. Let me check out the charts. So TLT is making its way up. I think the bond market has it wrong. I think that I have a week until this expires, so there's not a lot of time for reality to be put into check. But I do think that the bond market is starting to get a little bit delusional, thinking and trying to fight against the Fed. So I'm going to hold the call credit spread that I opened for TLT, but it definitely looks like SPY is on a downtrend this morning. I have an alert set for 395.10 is what it looks like. And as long as SPY stays below that, these options should be going for roughly 60 cents a piece. Right now they're going for 90. So basically the market is telling me there's about a 90% chance of this trade going through. And I would probably say that the market is right on this one. I'd probably say that there's about a 90% chance, maybe like 88 to 92% chance. So I'm going to try to close this, hopefully, with Robinhood spreads. We'll see if it actually freaking happens. I'm going to try to close it at 88. I bought 10 of them for 44, so that would be about 100% profit, so I doubled my money. And we'll see if we get filled for this trade. Likelihood is probably pretty low, thanks to Robinhood's bid-ask spreads, but yes, TLT, I would short. I am already short TLT. Also, if anybody knows how to get my camera working on OBS with the new Mac OS 13 or whatever, if y'all could help me out there, that would be excellent. Because for some reason my camera just doesn't want to show up anymore. And I checked like the camera settings. For some reason that didn't work. But yeah, anyway. Let's get this bread. So I'm making some money on Adobe too, so that's good. I opened this 335, 330 put debit spread yesterday. That one's up about 20% so far. I didn't spend a lot of money on it. I only spent $424. So this is for their earnings report, which is coming out today after hours, and I think that the overall market's going to have a rough time generally at the end of this week. So today and tomorrow, I think we're going to get a decent sell-off. So I think I'm going to hold this Adobe spread. PDT rule. Yeah, PDT rule is so annoying. I actually got PDT ruled on Aries. Otherwise, I would be using their platform. I love Aries a lot more because their bid-ask spreads aren't stupid wide like this one. Like, I always use Aries as my examples for comparing spread options. So if we look at this, if we cancel and replace this order, Robinhood's saying that this is going for between 72 cents at the bid and 105 at the ask. But if I go over to Aries, tradearies.com. Let's see. How does it know my password? I've never given my password to Chrome. That's crazy. Ugh. You gotta be kidding me. Okay. Let me do this over here. I don't even know my freaking Google password. Okay. I guess I'm just gonna have to pull it up on Safari because I'm already logged in there. But if we go to Trade Aries, log myself in, you'll see that I'm 90-day restricted for whatever reason. I'm pretty sure that I didn't day trade 3 times, but ended up getting PDT ruled. And if I search for SPY, go to their option chain. This one was expiring for tomorrow, the 16th. I don't know, it was expiring for today. I ended up buying the 398, selling the 397. So this is a put debit spread. So if we buy this, sell the 397. That sucks. Did you call them to make sure? I haven't called them yet. I haven't had enough time in order to get around to it, but I am planning to make that happen soon. Hopefully after today's live session, I'll have it fixed. And like with Aries and pretty much with any broker, like if you call them after you get PDT ruled, you can actually get rid of the PDT rule to where you can trade again, because obviously like they want to keep making money and they make money off of people trading. So, but anyway, back to that SPY spread. It was going for 89 at this bid. So let's try to close it again. Sorry for the voice crack there. Alright, so here it's going for, well, I guess 80 cents now at the bid. The bid ask is just changing like crazy. But, let's see. Let me try to close it at 90. We'll give it a shot. Actually, let's give it a shot at 88 again. Nope. They don't want to give it to me for 88. Alright, I'm just going to leave the order in. I'm going to screenshot it, send it over the Discord for everybody to see over there. Closing options alerts. Well, not closing options yet. Limit order to close by put debit spread. Well, put debit spread expiring 12/15 at 0.88 each, and strike prices were 397, 398. Premium 101. Alright. We'll see if we get filled on it or not. It's kind of like Russian roulette with Robinhood. You never know if you're going to get the bullet or not. Anyway. Let's see if we can make any new trades for today. We're definitely coming down. I'd say it's pretty hard to go back up to where we topped this morning at 395, but always a possibility of anything, right? Stocks can go up, down, sideways, etc. Just can't go left on the time frame. The ECB sees another 50 basis point rate hike at the next meeting. Oh, really? Sees 2 further 50 basis point at the rises as possible after February. So they're raising a lot in the face of their recession. That is, I mean, it's a necessary evil, kind of like I was talking about earlier, in order to get rid of inflation. Like It's just an inevitability to bring the money supply down. Like, the thing about the money supply, right, and supply and demand is that whenever money is cheap with low interest rates, whenever people can borrow cheap debt, that creates more money in the market. That's how money is made in the Western world, in the United States and Europe, right? People take out debt for houses. They take out debt for vehicles. They take out debt to buy groceries, right? We pay groceries on a credit card. We buy everything with debt. So now that interest rates are going up, we can't afford as much. Like if you try to finance a vehicle at like 3% versus now interest rates for vehicles are like 7%, that vehicle is going to cost you a whole lot more on the monthly payment. Like you can look at, let's see if this Robinhood trade closed, and then we'll talk about that a little bit more. I feel like y'all are getting a little bit of some financial education out of this too, more than you are trading. Hopefully it's useful for y'all though. Closing, options, alerts, premium, 101, premium. Just close the SPY, put debit spread. That one expires at 12:15 at 88 each. So the limit order went through basically. 397, 398, and I originally picked that up for 44. A 100,000% inflation. Jesus Christ. That's awful. I was looking at, I think it was Argentina. So Argentina, interestingly, so they won the World Cup. I don't follow sports very much, but it's interesting that the country with the highest inflation rate is the one that won the World Cup. Now, I don't know why that is, but what's interesting about it is that their inflation rate just month over month, so 1 month to another, was 6%. Yeah, I think Argentina won the World Cup. I don't know. Spoiler alert. My bad. Yeah, their yearly inflation rate was something along the lines of like 80%, which is ridiculous. They're in the finale. Oh, my bad. Yeah. I just found it interesting that the country that has the highest, literally the highest country, or the highest inflation rate out of any country is the one that's going to the World Cup. But, yeah, let's get back to the trading. Currently, SPY is trading at 392. Looks like a pretty awful day. That means that the VIX should be going up, though. What's interesting is the VIX has kind of been funky recently. So I bought some shares of UVIXI, which is a leverage ETF using the VIX. Is it a good day to do put credit spreads? I would avoid put credit spreads. I would be more in tune with call credit spreads for the day. I think that just after the market digesting what the Fed said yesterday, markets are just going to keep on coming down. With as much as they raised their projected interest rates, it is not going to be pretty. Like they went from 4.3 to 4.9, 4.4 to 4.9 at the highest rate for the end of 2023, all the way up to 5.1 to 5.5%. That's a 60 basis point jump. And, based on, 500 total basis points, that is 60 over 500. That's a 12% increase in their top rate. That is crazy to think about. Like, you don't see that kind of movement. Like, the Fed's volatility, the Fed funds rate volatility is freaking insane. But anyway, let's get back to the trades. Looks like we're just headed straight down today. I think I might add more to the TLT. So y'all already seen this, so I'll open it again. 109, 110 call credit spread. So I think that the bond market is just delusional at this point if they think that rates are going to come down like we're seeing for the TNX, the 10-year Treasury yield. Rates should be going up more, but we're not seeing that. The markets are failing to believe what the Fed is telling them. And again, don't fight the Fed. So if we go over to the FOMC watch tool, I kind of want to see where they project the rates now after the Fed basically gave their predictions. So as of June 2023, next year, they expect the interest rates to go to 4.75 to 5%. So that's almost at the top end of the range of 5.1 to 5.4. And then by December of next year, they're expecting the rates to actually cut. Again, they're still expecting the rates to cut in Q2, Q3, and Q4, which is ridiculous because like the Fed has literally outlined their plan to raise the interest rates. They're not going to cut in 2023. That's what Fed chair came out and deliberately said that. And people are just fighting the Fed, even in the bond market. It's crazy. Absolutely crazy. This is where you will get the Fed going against the market. This is where you'll see the Fed might actually pull off going against the futures for the first time in like 60 years. That would be a huge shock to the market. I was talking about that for December, but if the markets really expect the interest rates to be cut in June to December, they might be in for a rude awakening. We might see a brutal sell-off if that happens. People fighting against the Fed pisses the Fed off. Yeah, exactly. Like, it's working against their plan in order to, get rid of inflation. It's working like they're trying to create financial tightness. And whenever people are trying to send stocks up like 3% after CPI comes out barely lower than expectations, then that is not financial tightness. That's not what the Fed wants at all. So it's absolutely ridiculous. But I'm going to open some more of these. So far, I got $196 of credit, 28 each, so 100 minus 28, 72 multiplied by 7. I'm only risking 500 for this trade, but I'm pretty confident for it. I think I'm willing to put up to 800 to 1,000. So let's see how many more we can open. Right now, they're going for about roughly 30, 35 a piece. We'll call it 32. 100 minus 32 is 70, basically. So we're willing to risk like 200 more, 200 to 400 more. Call it 300 divided by 70. So I can open 4. So that'll put me up to 11 of these. Depending on what price I get, obviously. It's going to depend on what the markets are willing to give me. I'm going to try for 34, see if we can get filled. With Robinhood, who knows? What happened to my put spread? I ended up making 100% profit for it. Ended up buying that at 44, ended up selling that at 88. But let me post this new, or adding options alert. Options alerts, premium 101, premium. Just added 4 more, TLT 109, 110, call credit spreads, whoops. CCS, expiring 12, I think the 23rd, if I remember right, 12/23, at, what price did I get them for? 136 over 4, 34 each. Alright, so Same analysis as I had before. Let's see, TLT, call credit. All right. Same analysis. Well, actually, it's kind of a new analysis. Bond markets think Fed is lying about interest rates and expecting cuts from June to December 2023, but the summary of economic projections shows no cuts expected until 2024. This means this means that rates across the board should be going up, but again, the bond market thinks that the Fed is lying. This means that bond rates should be going up across the board, sending bond prices, TLT, down. Anyway, so bond markets think the Fed is lying. And, well, the Fed is going to show that they're not. No matter what it takes. The only thing that could potentially stop the Fed from continuing to raise interest rates is something along the lines of Lehman Brothers, so something on a mass scale similar to like the FTX thing, right? So FTX, BlockFi ended up going bankrupt, which didn't really amount to much. But if you have that happen to, I don't know, maybe a company like Robinhood, or somehow like Fidelity or Thinkorswim, or a major broker, then that's when they would end up having to cut rates. But until something on a mass scale happens, they're not going to cut the interest rates back to zero. I have an AGG average 111. Not sure what AGG is. Let's see. AGG. Aggregate bond ETF. Oh, yeah, that one's not doing too hot, especially today. So it's an aggregate of U.S. investment-grade bonds. The market-weighted index includes treasuries, agencies. What is the rate supposed to be on it, I wonder? I mean, I know it's an ETF, but I wonder how much it's supposed to pay. It has a 30-day yield of 3.93. Now, I haven't studied bonds enough to understand what a 30-day yield is. I'll have to look into that a bit more. Is that really what they pay you each month, like 3.93%? That seems a bit outrageous. I don't think that they would be able to give you that. TLT trade becoming a bit crowded. I don't think so. I think that TLT, we saw the 10-year treasury yield already going up, so markets are coming back to reality there. But TLT, like, everybody is just kind of, disagreeing with what the Fed is saying. And I think, hopefully, we're going to get some Fed members coming out and kind of confirming that they're not bluffing. That's what I would expect. So let's see when the next Fed member is speaking. Let's see. Go to the economic calendar. Investing.com is the one that I like to look at. AGG doesn't pay dividends on time. That's interesting. But yeah, if we go over to the economic calendar, where the hell is it? Investing.com/economic calendar. There we go. I want to see when the next Fed member is speaking. That is my goal. There's a lot that's going on. Oh, I didn't filter by the United States. That's why. Clear all. Go to the United States. Okay. Now. Oh, I didn't even look at the retail data that came out. So retail sales were actually down 0.2% month over month. That's actually a little bit shocking that retail sales are coming down in December when, well, I guess this is for the month of November. Wow. So the forecast was positive 0.2%, but it actually came in at negative 0.2%. So people just don't have enough money to spend at retail, thanks to inflation and partially because of the higher interest rates, I would say. But initial jobless claims came in at 211, so we're seeing jobs slow down to. Oh wait, initial jobless claims came in at 211 versus 230 expected. So less people unemployed than what was expected, and less than, I'm guessing, the week before. I think that the initial jobless claims is a weekly report. But yeah, let's see if we got any other data. Retail, X, Philly. Yeah, don't really care about any more of this. I'm trying to find if there's any Fed members that are coming out and speaking soon. That's what I'm interested in. There's no Fed members scheduled to speak even next week. That's interesting. When the hell are they coming back? I don't know. Well, I figured that they would come out after the interest rate hike and say their piece, but I guess not. Adobe, though, is coming back down to 330, below 330. So the put debit spreads that I had opened are up 28%. Still planning to hold these. I just got 2 of them for $212. I still think that the markets have more to give up, so I think that's going to drag Adobe with it, even if, like, Adobe has a decent earnings report. Oh, wow. SPY's at 391. Jesus Christ. Damn it. That means I could have freaking extended the expiration date for my 393 or 391 390 spread, and I would have made profit. It's the day after is when you get the big sell-off. Ugh. So annoying. Any thoughts on longer dates? June for FTSE 100. Been in a massive range the last year and still hovering towards the top of it. So for June, FTSE. Let's see, FTSE. So that's the European Stock Exchange, right? Not really sure. What is the ticker symbol for FTSE 100, if there is one for, like, Robinhood? Let's see, FTSE. I'll search for it on Thinkorswim, too. Wow. So this is a proxy for it. Maybe. Hopefully. I'll just search it on Google, I guess. Good old Google. FTSE 100. For good monthly dividend pay on time, AGNC and KBWD. Haven't heard. I'm not too much into dividend stocks. The only dividend stock that I have is QQQX. But it's actually a cover call fund, since I'm not going to put my money up for cover calls. I'm actually making a video this weekend on option strategies to avoid, and I kind of gave a hint towards it over on my Twitter this morning at ungodly hours, because I woke up at like 3 this morning. I didn't make this tweet till like 5 or 6 a.m. But yeah, so avoid option strategies that require a lot of capital during QT, quantitative tightening. Cash is king, so keep your money available for better opportunities. So generally, option strategies that require a lot of capital. So if you think about it, that's going to be cash secure puts, especially for higher price stocks. It's going to be covered calls because you need to own 100 shares of the company. That also kind of includes leaps options. So leaps options obviously are more expensive the longer you go out in your expiration date. So that's why you see me trading a lot of like short dated options, because I don't want to use up a lot of my capital, right? So the best thing that you can have right now in this crazy volatile market that's swinging back and forth left and right is buying power and liquidity. If you don't have any liquidity, you can't make any trades. So try to avoid option strategies that require a lot of capital or liquidity. But yeah, that's why I'm not buying 100 shares of. I could afford 100 shares of QQQ and sell the cover calls myself, but I'm using QQQX and dollar cost averaging into it. Probably not the best trade idea, I would say, just considering QQQ is likely to continue selling off as interest rates go higher, because growth companies, it's going to cost them more money to borrow money. So, investing in tech companies probably not the greatest idea right now, but that's why I'm only dollar cost averaging like 1% of my cash every single week. So I can dollar cost average for the next 2 years and I'll be fine. But yeah, let's see what else is going on in this silly market. SPY's going down to 390. So could have made money on that 391, 390 spread if I gave it just another day until expiration date. I always have the problem of being right too early. But hopefully we can try to be less wrong going forward. What else we got going on though? TNX, I think it's making its way back up. Kind of came down. Interest rates, don't know where they want to go. They don't know whether or not to believe in the Fed. VIX is up 5% today. That's actually pretty good for the UVIXY trade. I still want to hold the UVIXY trade that I have. Thanks to one of the members in the premium Discord kind of brought this idea to me. There's going to be increasing fears of recession, and I think that the data is starting to show that a little bit, with core retail sales coming down by 0.2%, but that could also just be a product of inflation being as high as it is. People can't afford to buy as much retail goods. But it was, let's see, Feather who made this comment the other day. Oh, and I just pinned the comment for the Discord. That's the premium Discord. You can click that link and sign up for the free trial at the very top right here. Available to people who haven't received it already, and since I just started it yesterday, everybody should be able to use the free trial. But he had said that he expects UVIXY to go up, basically on the fears of a recession. Let's see if I can find his comment that he had made. So he's planning to dollar cost average and sell covered calls on it. Now, I don't know about selling covered calls on UVIXY, no, because with UVIXY, it is going to continue to trend down, even if, the VIX always trades flat. So it's going to continue to trend down. So I don't know about dollar cost averaging, depending on your time frame. If you were to dollar cost average, the way that I would go about it would be buying however much that I can afford to buy. And I would do it on a daily basis rather than like a weekly basis like I'm doing for like my long-term portfolio. But I would do it maybe on a daily basis. Cover calls, though, I'm not so sure about that, because if you get a huge spike in volatility, then you're going to get, assigned on that cover call to have to sell your 100 shares at a much lower price than what you could sell it for, potentially. Now, it's obviously all theoretical, and Um, Nothing's really guaranteed, but you would be missing out on that greater opportunity, basically. So you're giving up an opportunity cost. But let's see. I think that it'll pick up in the coming weeks. Would not be shocked if we get. This is the comment that I had liked. Would not be shocked if we get renewed recession fears, which has been lost in the narrative, or war escalation now that the World Cup is ending. So, not really sure on the war escalations in the World Cup because I haven't been following that as much recently. But I do think that we're going to get renewed recession fears, which is likely to send volatility up if people are worried about a recession coming up next year. Is a call credit spread good for today? I would have opened it earlier. Now I would be a little bit hesitant to it. But currently SPY is trading at 392. Actually, it's recovered a decent bit. You might be able to get away with like a 394 or a 395 call credit spread. I just don't know how much that's going to pay. Let me see if I can make that trade. So I would assume SPY is probably going to likely to end the day under $395. So I'm going to make this over in the premium Discord. So it's a call credit spread. I'm assuming SPY is going to be below the 395 mark, but I want to make sure that it gives a decent credit, because if it doesn't give a decent risk-reward ratio, then it's not worth trading. And the risk-reward ratio on it is okay. So the markets are telling me that there's about a 15% chance of it working out. I would say there's maybe a 5% chance that SPY goes back above 395. So there's about $10 of opportunity in that spread option. Oh, sorry. And for this trade, I'd probably be willing to risk, I'd say like 600-ish. And if SPY goes up to the 395 mark, these would be worth about 40 a piece. Right now they're going for about 15, a little bit less than 15 now. 40 minus 13 now is 27, so 600 over 27. I can open about 20 of these spreads. But yeah, let's see. Actually, the price of them just went up thanks to SPY rising a bit. Hopefully we can get in quickly at a good price. Please, Robinhood gods, fill me on this order. Yes, they did. Cool. So, yeah, new call credit spread, assuming SPY is going to be below 395. I think that trade's going to high likelihood of working out. Again, I would say there's about a 95% chance, but the markets are telling me that there's a 85% chance. So a little bit of arbitrage there between my thinking and what the markets are telling me. New options alert, premium 101, premium. Just opened a new SPY call credit spread. This one expires, let's see, today. This is a day trade expiring 12/15. And I opened this at 15. Let's see, 395. SPY coming down today after the Fed talk yesterday, and likely to stay down as interest rates went a lot, as the funds rate, I should say, the Fed funds rate went a lot higher than the markets expected, but wanted to give myself room to the upside due to high volatility. But yeah, right now we're trading at 391. Those spreads are probably already up a decent bit. Check on them. Yeah, those are already up $60. I opened 20 of them, and I'm planning to ride those down to about $5 to $8 a piece is the plan. which will be another $200 ish of profit for the day. Again, the 395 level is the most traded price in the last 12 months. Probably. I would not doubt it. Like, you can look at the volume profile probably and find that data. If you go to edit studies on Thinkorswim, pull up volume profile. This will give you the volume by price, basically. And if we go to the yearly chart, like you said, yeah, 395 is the most traded price of the year, basically. What is this? Why is there like a gap right here? That's interesting. Well, technically 396.39 is what it looks like, but lots of volume at 390, 395 levels. And you can kind of use this to find like support and resistance levels at like peaks. So the next big support or resistance level would be around 385-ish. So if you expect the markets to keep coming down, you could use that as kind of a proxy to set your strike prices. And really, there's kind of equal volume almost between 385 all the way down to about 372, and then the volume dropped off because we didn't trade below the 372 level for that long, basically. Yeah. The volume profile is a very nice tool. I like using it sometimes. It's just that it takes up a lot of space on the chart, and it's not too visually appealing for me, so I don't keep like any studies on my charts, basically. Just price levels for the most part for me. Hi Greg, do you close your winning? Why do I close my winning positions instead of leaving them to expiration for the spreads that end at less than 5? So the reason is I have like a set probability in my head of what is the likelihood of this trade working out, and I use that to close my spread options. And the reason why I prefer to close before the expiration date, especially on a day like today where there's high volatility, is because in that last hour, 3 to 4 o'clock, you could get a violent swing to the other direction. So I would rather take my profits while I'm ahead than risk, going into that 3 o'clock hour and the higher volatility that comes along with that 3 o'clock hour. I would rather take my profits and run than have to, deal with the stress of that, basically. Someone didn't exercise my contract on a cover call for skew at 48. Oh, man. Let's see. Skew. Yeah, that one's definitely on a rise today. It gapped up overnight. 46 to 40. Well, I guess 45.60 to 46. I wonder how DFIN is doing during all this. So DFIN's coming down. This is defense and aerospace, which generally does good during times of like war and stuff, because obviously these defense companies get more government contracts during times of war. So it already saw quite a bit of a rise from 11. Kind of wish I was actually looking to pick some up when I was trading around this range, 11 to 13, but I hesitated on it, obviously. Kind of regretting that now that it's up 50%. So I'd rather not buy it now that it's up 50% already. It's down 5% today, but aerospace defense companies generally do well during, war times. And let's see what McDonald's and all the staples are doing. McDonald's is down today 1%. What else is there? Coca-Cola is a staple. So these are companies that people can't live without, basically, even during a recession. Walmart would probably be one, too. Yeah. Walmart's got a fat gap in there from an earnings report from 137 to 146. That's interesting. Apple, not so much. People generally don't buy new iPhones and new MacBooks during times of recession. Now, their services that they offer, actually, services would even be even worse, which is where they've made a lot of their money, right? So, services has been making up more and more share of their revenue. Over like the last 10 years, they've, kind of become more of a software-based company than a hardware-based company. And you can also attribute a lot of that to the 30% tax that they put on the App Store for developers. A lot of their revenues come from that. There's probably going to be less app development in a recession, and there's going to be, less services sold. So I think that Apple, their revenue, their earnings is going to come down. And then people are probably going to put off buying the next iPhone for, 2-3 years because they're not changing their design dramatically like they did back in, the iPhone 4 was a big one, and then the iPhone 10 was a big one, but we really haven't seen much progress in design of the iPhone since the iPhone X. Hot take there. Apple has really died in terms of innovation whenever it comes to design, but that's just my opinion. Anyway, I'm about to sign off. It's 10:30. We got 49 viewers and 11 likes. If y'all can get me to 30 likes, I will stay on for an extra 30 minutes and see if we can close the call credit spread that I had opened earlier. I'll zoom in so y'all can see the amount of likes. But I need 30, and I'll keep going for another 30 minutes. Getting quite dehydrated right now, but just saw an article allowing more third-party apps on Apple. Third-party apps. I'm not sure what that. Thank you, Donald. Thank you, Martin. Thank you, everybody, for the likes. We got 22. Need 7 more now. And I'll keep going for another 30. My knees are killing me today. 25. 5 more. There we go. We're there. 27. I'll call it close enough. But, yeah, let's go back to the SPYs. Currently trading at 390.50. I opened that call credit spread when I was trading almost at the top. Got lucky with the timing on that, I guess. But I opened it when I was trading right around here-ish, 391.50 or so. Let's see. SPYs trading. Well, the contracts that I opened are already up a decent bit. They're going for 11 now. I opened them whenever they were trading at 15. So far I've made $80 a profit, $100 a profit, depending on how much the spreads are fluctuating by. And it looks like we might be breaking down again, maybe testing that 390.3 low that we created at 10 this morning. The volume is starting to slow down. We got a lot of the volume at that 10 o'clock mark, almost as much as we got on the opening. Interesting enough. But volume generally slows down around this time between like 11 and like 2 p.m. and then it starts to pick back up. Like you can see a pretty decent trough each day around 11 a.m. and then it picks back up around 2. Pretty much cyclical every day. Sometimes, like if there's like a Fed event, that'll kind of change, obviously. Like yesterday at 2 o'clock, there was a lot more volume than there usually is. There was more volume at 2 o'clock than there was at 3, interesting enough. I think this might be your calling. I sure freaking hope so. If I do it every single day. No, I got very lucky with the timing on that. I'm usually very poor at timing my trades, but yeah, I opened that at 390.50, 391.50. SPY just came back up. That was a lot of volume that pumped right there. I wonder if there's any news that might have came out to reverse. Not saying anything coming through Thinkorswim, but let me see if there's anything on what you call it, investing.com. Investing. Oh, we already have the news feed up here. Don't need to reopen. ECB. We'll search by most. No, not most popular. Let's see most recent. It's the latest news. U.S. stocks fall after Fed signals higher for longer stance. So, no news articles, but we got a decent pop of volume right there. Almost as much volume as we saw at 10:15 right after the 10 o'clock spike. Interesting. I guess people probably just saw SPY hit that 390.5 level and maybe jumped in to try to save it and buy it up from there, but looks like a failed attempt so far. Not going up yet. If it goes back above 391.50, I'm still not going to close. Again, my plan is not to close this until it reaches about 395, which would be about a $600 loss for me. So I'm taking on a pretty bad, quote-unquote, risk-reward ratio. Trying to take $200 of profit in order for a max loss of like 600. Not a max loss, but a cutting losses at 600. So I'm taking on a 3-to-1 risk-reward ratio, which is generally seen as bad, but it's a high probability trade. Like, again, I think there's about a 95% chance of this trade working out, so I'm willing to take on, that added risk for the trade. To close a put credit spread, do I just buy back the sell option? So I'll show you how you would do that. This is the call credit spread, but you're basically going to do the same thing with the puts. Robinhood has the close feature, so they make it super easy, but if you have to close it manually from another broker or for whatever reason, what you have to do is you have to sell the options that you bought, so the 396 for me, and then you buy the options that you sold first. I would be buying back the 395. So that's how you close it. You just do the opposite of how you open the order. So if you had, say, a put credit spread, let's say that I opened a put credit spread with a 390, 389 strike prices, I would do, let me select put options, So if I'm assuming SPY is going to be above 390, I would sell the 390. I would buy the 389. I would open this trade, obviously. And then in order to close it, I would reverse the order. So I'd buy the 390 put back. So I'd set a buy to close order. And then I would sell the $389 put. Yeah. Will this morning live session be on for a long time? Just another about 23 minutes till 11 o'clock. Yeah, no problem. Anytime, any questions you have, I am here for. Looks like SPY is just gonna end up trading in this range for a bit. Hopefully it doesn't trade flat for the next 20 minutes, but that would be my luck. Let's see. Portfolio is up to 35.4 today, up $500 thanks to the put debit spread that I had opened with the 396, 397 strike prices. The Adobe spread is doing okay now. Adobe ended up coming back above the 330 mark. Their earnings is today after hours. I'm expecting earnings to be rough because they're a software-based company, obviously. And my assumption is that they're going to be below this 330.58 level. And hopefully they sell off a bit more. That way I can make my max profit a little bit sooner. The expiration date for this is tomorrow, so I am cutting it a bit short. Usually for a Thursday earnings, I would set the expiration date for the week after. But for this one, my idea was not only are they going to have bad earnings, they're also going to sell off with the rest of the market because of the Fed meeting, which is exactly what we're seeing today. Adobe is down by 2.7%, whereas SPY is down 1.9% at the moment. So it's got a little bit higher beta thanks to it being, a tech-based company. Usually, like, you can just look at the NASDAQ versus SPY, and NASDAQ is down 2.5%, and it's heavily tech-based versus SPY is only down 1.9%. What's the next support level for Tesla? That's a great question. Who knows? Let me see. TSLA. I ended up buying some shares yesterday towards the end of the day at around 156. I'm dollar cost averaging into Tesla once a week, just $100, nothing major. I'm planning to invest in Tesla for like 5 to 10 years. I think that electric vehicles are basically the new iPhone or the new social media. There's going to be an S-curve adoption for electric vehicles because ICE vehicles, regular vehicles, you don't get the software that comes with them. With Tesla, like, you get automatic updates with software. You don't get like autonomous driving. There is some vehicles, like Ford is working on some stuff with automation or automated driving, autonomous driving. There's other companies that have done ICE, but I feel like it's a lot easier to do it with electric than it is, just because there's so many more moving parts with the ICE vehicle than there is with an electric. But looking at the support levels, I have 149.76, which is coming from September of 2020. I would say the next major one is 109-ish. So there's a pretty sizable gap in the charts. Let's see. This would also be a support level right here. So this is a large candle of significance, is what I would call it. From open of 111.18 or 111.80, 111.8. It closed at 136.67. Divide that by 2. So that would be a support level at around 124.24. That's going to be your next one after 141.76. And then a more obvious one would be right here. So the top of the body of these two candles, which is roughly 110. Nice round number sake. So those are your next 3 supports. You've got 141.76, 124.21, and then 110, which just got deleted somehow, but let's redraw the dang thing. I'm just going to leave it as 110.38. Too lazy to correct it, but yeah, just call it 110. Yeah, no problem. And then on the upside, I've got all these resistance levels. Obviously, a lot more resistance levels since it's headed down. But probably the next one would be all the way as low as 84-ish. But plan to keep dollar cost averaging. I don't really care about the short-term price movements when I'm planning to invest in Tesla for like 10 years. But let's see. SPY. making its way back up to 392. So it looks like that call credit spread might be losing us money at the moment. Let me double check it. It's either losing money or break even, barely breaking even. One of the two. Did I ever watch Ricky Gutierrez? Yes. Ricky Gutierrez is how I got started trading. I used to trade UGAS, DGAS, and all the stuff that he used to trade. Back in the day, in 2016 or something like that is when I started trading, and I really liked his videos because like he kind of tried to simplify it the best that he could, which is obviously what I'm trying to do here, but let's see, with options trading instead of trading stocks. He likes TQQQ and SQQQ and basically just trades those two. But he used to be really big in like oil, following oil news all the time with UGAS and DGAS, and I had no clue how the oil market worked. I had no business trading the oil market, but I did anyways because he did. So expertise is important. Like if you don't understand a certain industry, like me not understanding oil, then you probably shouldn't trade it. Hope this session will be every morning whenever the market is open. Yeah. I mean, I've been doing it every day. It's been like 3 weeks now. Usually it's 9:30 to 10:30, but we still got this SPY call credit spread that I'm hoping, fingers crossed, to close out of in the next about 15 minutes. Right now, SPY is kind of stalling out, but it looks like it's headed higher. I'd probably guess to about 392.70-ish. You could also use this candle significance. So large candle right before a breakdown. 392.70 plus a close at 391.58. Divide that by 2, and you get an average of 392.14. So that is going to be a resistance level at 392.14. My head is starting to hurt right now. I've had some sort of bug or something recently. It's been making me cough a crap ton, and now my head and starting to get fatigue. Ugh. I hate being sick. But 392.75 is probably the next markup, and then you would probably use another body or candle of significance right here. I would probably call it 393.36 just to keep it short. 392.35 or something. Let's see. 35. 393.35 is what I meant. 393.35. Yeah, we kind of got a double bottom with this candle, and this candle tried to touch the bottom. But overall, selling pressure seems pretty high today, given the Fed meeting yesterday. And I'd say there's a fat chance, almost 0% chance, again, like a 5% chance of going back up to 395. So, gonna keep holding that call credit spread. Hopefully, I'm not wrong with my estimates, but obviously sometimes I am. Just got to be able to recognize when you're wrong a little bit quicker, and that will save you from taking major losses. At what point do you decide to exit a trade when it's about to be a loser? So, like I've been kind of saying, I base my trades on probabilities and what I expect. So, for me, I'm saying that there's about a 5% chance of this trade going against me, right? So, ideal case scenario, I want to close this for 5 and take a profit. But worst case scenario, if this trade starts going against me, if SPY does end up making its way back up all the way to 395, if I'm wrong, basically, then I would close this whenever SPY hits that 395 mark, right? So around that price level, these spread options should be going around 40 cents a piece. So I opened them at 15, right? I opened them for 15 a piece. Worst case scenario, I'm going to close them for 40 cents a piece. So I would lose $25 with each contract. And I opened, 20 of these spreads, I think. So basically, I will lose about $500 if I'm wrong. But it looks like SPY is coming back down now. Maybe testing a triple bottom, but still pretty far away from that. It's currently at 391. The bottom was all the way down at 390.3, so still a ways to go. 70 cents or so. The spreads that I got are going for 11 now, so right now I'm up by 80. Again, I opened these at 15, and I'm estimating that there's a 5% likelihood, so I want to close them at 5. Worst case scenario, I close them at 40. They're already going for 9. They're pretty close to the $5 mark that I want. So I said there was about a 5 to 8% chance. So I could close part of the position once these reach 8 cents a piece. So what I would do is I would take probably half of them at 20 and then close them at 8. So like close 10 for 8 cents each. And then hopefully wait for the rest to come back down to 5 cents each. But looks like the bid is at 11, so the likelihood of getting filled on that is pretty low, unless SPY ends up continuing to come down. My hope is that it approaches the famous 395. Oh, so you want me to lose money, Aaron? Okay. Let's see. Yeah, I'm going to try to close 10 at 80, or 10 at 8. I'll post this to the trade alerts. Limit order to close by call credit spread. That one expires today. I'm about to pee myself. So hopefully we can get out of this quickly and I can exit this live stream. But expiring 12/15 at 8 each. P1F is my shortcut. Well, no, that didn't work. Premium 101. Premium. All right. Please fill my order. Probably not, thanks to Robinhood. Bid-ask spreads, always the worst. But hopefully we can get out. Trading at 390.8, so still about 50 cents from the bottom. You're welcome, Eric. Thanks for coming. Thanks for staying with me for an hour and a half. Senator seeks FTC probe of data sales to U.S. government agencies. Interesting. FTC, I wonder if that's a typo and they meant FTX. Oh, the Federal Trade Committee is what I'm assuming. U.S. Senator seeks FTC Federal Trade Commission probe of data sales to U.S. government agencies. That's That's a doozy. It's a Democrat, Senator Wyden, asked the Federal Trade Commission to investigate whether an internet infrastructure company violated the privacy rights of millions when it sold records of where they went online to the federal government. The Washington Post cited a paragraph entered into a record in the Justice Department's prosecution of Democratic lawyer Michael Sisman, stipulating that companies associated with long-term industry entrepreneur had sold information directly to the government agencies where it had classified contracts. Interesting. Sussman, that's a familiar name. I've heard that name a couple times on Twitter. Didn't really look into it. Don't really care about Washington, so not gonna pry too much in. But yeah, I got about 6 more minutes until 11. Hopefully these spreads fill by the end of this live session would be nice. But with Robinhood, maybe not. We'll see. It's a game of luck. Do I look at the Greeks? Generally, no. So the Greeks are useful in estimating the percent likelihood of an option going against you or for you. Like if you look at the 395 call, the delta value is, let's see. The delta value is 14. So what this is telling you is there's about a 14% chance of this option becoming in the money at some point during the day. But the problem with Delta and the problem with the Greeks is they change based on where the stock is going, right? So if the stock ends up coming down another $1, then the Delta is going to change by the gamma value. So right now there's a 13% chance of this trade working out, but if SPY comes down from 390.7 right now to 389.7, then there's only going to be an 8% chance of this trade working out or becoming in the money, right? So you take the gamma value, which is 0.05, you subtract that from the current delta value of 0.13, and the new delta value that would be created from SPY coming down $1 would be 0.08. Now, if SPY ended up going up, is it possible to use stop losses with options? Yes, you can put limit orders in, and that'll act as a stop loss, but I generally don't use stop losses just because, I'm always monitoring the markets to some degree. I think that they do have an option to set like a stop loss or a limit order. I'm not sure exactly. Let's see. I think if you click on this down arrow, yeah, you can place a stop limit order. So it's similar to a stop loss order. I think it's slightly different. I think the verbiage is just different. But these trades should be getting filled almost 8 cents each. Pray that we can get filled in the next 4 minutes because I really got to go pee. But we're almost testing that 390.3 level. Currently trading at 390.54. So just another about 20 cents to go. And if it breaks that, I would assume that it would probably go below 390. But we'll see. We'll see what the markets have in store for us. 390.36. We're getting even closer. Probably going to see some more volume picking up now that it's trading in that range. But 390.39, 390.37, 36 pennies. There we go. 390.25. So we crossed the new low, new daily low. So we'll see if we go back below 390 or not. It'll be interesting. But still not filled on that damn Robinhood order. Ugh. I hate Robinhood. Alright. I'm going to have to leave the live session because I really got to go. So I will catch y'all tomorrow, 9:30 in the morning. Hopefully y'all have a great trading day. Hopefully y'all make some good profits today. And I'll catch y'all tomorrow. See you, everybody.